From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming May 24th Forex session in the euro dollar pair. As you can see, we had a positive day in the euro dollar on Thursday, but if you've been watching the videos or reading the articles, you know that I had suspected that we were simply going to chop around. After all, this particular candle had a lot of people concerned because it looked very weak. It looked like a shooting star that was going to continue the downtrend. I had suspected that the 128 handle was going to hold and we were simply going to bounce back, and that's what's happened so far. When you look at the charts from a longer term perspective as I zoom out, you can see that the 128, 127 area is extraordinarily supportive. Because of this, I think it's going to take something really special to break this down, and it's going to need headlines, something bad in Europe to happen in order for this to really break down. There are a lot of people out there talking about the potential head and shoulders, and I will go ahead and mark this for you, although I'm not really sold on this idea quite yet. That it's a complex head and shoulders. I think it's just simply a choppy market and will continue to be until this European mess is over with. That being said, I have to be upfront and say I've traded this market very, very sparingly over the last several months, and a lot of my friends have just flat out stopped trading it. Looking at this chart, I cannot help but think that perhaps we are finding the summer range between 128 and 130, and on the upside between 130 and 132. And a lot of times you'll see this. You'll see the overall range, which I'll draw now, 132 to 128. It's a 400 pip range for the summer. That would be perfectly acceptable, well within tolerances of normalcy. You can see that we've had the same thing before. This, of course, was in fall, but nonetheless, you see it. And then you have two boxes essentially. You have a box at the top that you can bang around in, and then you have another box at the bottom that you can bang around in as well. And in the meantime, you have an area that is essentially the midpoint, the fair value, if you will, and that's part of what makes 130 so important. So I think we're going to bang around in these boxes going forward. Right now, I think it's all short-term trading, and if I were to trade it in the next 24 hours, I would look for some type of supportive candle, or excuse me, resistive candle around 130, probably based off of the hourly chart, and short it for a small trade, maybe 100 pips at best. As far as long-term clarity is concerned, we're probably not going to see that anytime real soon.